So, left-wing people have an awful lot of examples they use to try to justify the claim that America is a white supremacist society, or that there is such a thing as white privilege, that there are hurdles that black people have to get through, which white people just don't. And one of the examples that they point to has to do with getting a loan for a home, for a business, that sort of thing. They say that one of the reasons that black Americans haven't been able to build wealth the way white Americans can is because they haven't been able to own homes, and the reason they haven't been able to own homes is because they haven't been able to get a loan to own a home. And they say even today there's discrimination such that banks just won't give out loans to black people. Or the better way to say it is harder for black people to get a bank to give them a loan. And when they do give them a loan, it's normally at a higher interest rate, such that it just destroys the black family's ability to acquire wealth across generations. Now, from the outset, this is a very strange idea. It supposes that the way you build wealth, that if you have, say, $100,000, $200,000, the best way to grow that into a larger sum that you can someday give to your children is to use that as a down payment and go into debt and buy a house. This is wrong. I mean, this is just financially wrong. There's no way to argue it. It just is because, well, for a lot of reasons. If you had that much money and your goal was to build wealth to pass on to your kids, you could do better things with it than buying a house. But setting that aside, there are other reasons to buy homes besides building wealth. And maybe you say that, sure, you could do better things with it, but that's hard to do because if you have all this money and you don't buy something like a house, then you're more likely to just spend it all or something. Or maybe if you think you can't get a house, there's less of an incentive to save up that money to begin with. And so let's try to look at the numbers and figure out if discrimination is even really going on. Unsurprisingly, I'm basically going to conclude that there is no discrimination going on, but let's see how I arrived at that conclusion. So, firstly, it is true that black people, Hispanic people, they're more likely than white people to have home loans denied, but it's worth noting that this does not normally happen to anyone. Even among black people, over 70% of the time, their loans are approved. And it's also true that black people are more likely to have really high interest rates. So they're more than twice as likely, for instance, to have interest rates of 8% or more. But that's comparing 7% of black people and 3% of white people. That's not most cases. Most black people, or the plurality I should say, are getting a loan between 4 and 4.9%. The majority of them are getting loans that are less than 5%. And that's basically the same thing for white Americans, that the plurality of them are getting interest rates between 3% and 4.9%, so a little lower. But in both cases, the majority are getting under 5. These really high interest rates do disproportionately affect black Americans, but this is rare among any race, just as getting denied a loan for a home is rare among any race. The way that leftists try to show that this difference is due to discrimination, the differences that do exist, which as I've said are not as large as they're sometimes made out to be, is to argue that even when comparing black and white people who are equally likely to pay back loans, black people are less likely to get a loan or get a higher interest rate on their loan. So, for instance, they might point out that white people are more likely than black people to get loans approved even when comparing people of the same incomes. But this is a bad argument because, as this 2013 paper shows, white people have higher saving rates than do black people, even after controlling for income, age, family size, education, and marital status. And so it makes economic sense to prefer white customers to black ones for banks, even if both people have the same incomes. These differences in behaviors after controlling for income also explain why racial differences in credit score ratings persist after controlling for income. So, as the Washington Post reports, a study found that whites earning less than $25,000 have better credit records as a group than African Americans earning between $65,000 and $75,000. Right, so poor whites have better credit scores than do upper middle class blacks. But the leftists will say that, in fact, studies show that there are differences in loan acceptance rates even when you control directly for credit scores. And this is also true, but it doesn't take account of the fact that the credit scoring system does not work equally well in terms of predictive validity for black and white people. So we can see here from a report given to the Congress by the Federal Reserve that, quote, consistently across all 3 credit scores and all 5 performance measures, blacks show consistently higher incidence of bad performance on loans than would be predicted by their credit scores. So that even if you control for credit scores, black people on average are going to be more likely to not pay back a loan. And that is because credit scores use some of the same metrics that we were looking at before. And so given this, the normal ways you control for loan worthiness between groups, they're just not valid. And so this is not good evidence of discrimination. That being said, there's also good evidence that this is not discrimination, because we could say, okay, we can't prove it's discrimination, but maybe it is. But there's even more evidence to suggest that it is not. So in that report to Congress by the Federal Reserve, it was noted that these differences in predictive validity of credit scores were especially true among people of low credit scores, so that among people with bad credit scores, there was a really big difference between black and white people in their probability of paying back a loan, whereas if you're looking at people with good credit scores, the racial difference becomes much smaller. So a study from the Chicago Federal Reserve found no racial bias in loan approval rates among those with a good credit score, but a significant bias in favor of whites among those with a bad credit score. Another 2004 paper found that black borrowers have a harder time getting loans, but only for those who don't have mortgage insurance. This does not look like racism. This pattern of data is exactly what we would expect if banks were acting in an economically rational way, trying to maximize profit as the goal, rather than satisfying their desires to be prejudiced. Another piece of evidence that discrimination is not taking place comes from this 1994 paper, which finds that loans taken out by black people are more likely to end in default. And this remains true after you control for the size and type of loan, as well as traits of the borrower, such as their age, income, and liquid asset values. And if you think black people are being discriminated against on the loan market, well, let's think about what that would mean. That would mean that they're being held to a higher standard. They have to have better characteristics in order to get the same loan. So you would think that once we're looking at similar loans, black people would have a lower default rate, but they have a higher default rate, suggesting that they are meeting lower standards to get the same loans, not higher standards. Now, maybe you think that they're being held to the same standard, so you give up one of the racism narratives, but you come in with the other, which is that they're getting the same loans, but these loans have much higher interest rates. Now, let's look at that in some more detail. A 2014 paper analyzed data from the years 2001, 2004, and 2006. And once they controlled for measures of consumer behavior and debt risk, the black-white difference in interest rates given, on average, was 0.29%. And this gap itself is small, and it might be explained by variables correlated with race that this paper didn't bother to measure. But in any case, this is a very small gap. The actual average gap is 0.33%. And so, at best, what is going on here is that black people are being held to lower standards and then being given slightly higher interest rates. And that's not a very compelling story of racism. But most importantly, the most important evidence against racism in this domain comes from a 2019 paper. They analyzed data consisting of a huge number of loans given in 2014 and 2015. And after controlling for fixed lender effects, so the differences between lenders and the interest rates they tend to give out no matter what race the consumer is, credit score, income, etc., they found, like the study we just talked about, a black-white interest rate gap of 0.03% and a Hispanic-white gap of 0.015%. So this result is like what we've already seen, but unlike the data we've already looked at, this data looked at the discount points given on loans and found a bias in favor of non-white clients. And so you have to combine these two different pieces of information to come up with the aggregate measure of bias, and they found none. And they found no racial bias in the borrower's expected pay schedule overall, so the overall schedule of payments the borrower has to make over the term of the loan, and most importantly, they found no difference in the expected revenue generated by a loan based on race. Now, the fact that there's no difference in the expected revenue of loans between black and white people, this can only really be explained by firms doing what is economically rational for each group. This could not, if they were just charging the normal rate, and what do banks normally want to do? They want to maximize profit. So if they're charging white people the profit maximizing rate, but they're giving different terms for loans to black people, not because they have to do that in order to maximize their profit, but they have to do that because of racial preferences, well then surely this would lead to different expected profits across the loans, and it doesn't. I don't know how you could possibly explain this other than by saying that they are just doing what is economically rational in both cases. It's also worth mentioning, just in passing, there's research showing that black-owned banks, which are presumably in blacker areas and have black people disproportionately working for them, actually discriminate, quote-unquote, or have more harsh terms for black people. They do this more than white-owned banks do. And so that is, I think, a weaker but another point of evidence against this racism narrative. Now, a related narrative has to do with the so-called redlining. And the idea here is that in the 1930s, the U.S. government created maps which demarcated certain neighborhoods as high risk for investment. And one of the variables they utilized when estimating the degree of risk in an area was a neighborhood's racial composition. So lenders were then given these maps by the government, and they became less likely to give people loans in these communities. And through public housing and zoning laws, black people were moved into these same high-risk communities artificially by the government, and this made these areas even blacker than they initially were, and so now black people are all concentrated in these areas that have been demarcated as high risk, which lenders discriminate against. Now, we already know that this basically isn't true because we've already seen that lenders do not, on net, discriminate based on race. But there's research worth reviewing that specifically talks about this narrative about redlining, which is worth mentioning because our woke liberal friends like to talk about this. Importantly, I should say the idea here is that these lenders are not discriminating directly based on race. They're doing it indirectly through these maps. So within the same neighborhoods, black and white people are going to be discriminated against equally due to redlining. Maybe they're discriminated against differently due to something else, but redlining will predict that within these high-risk demarcated neighborhoods, black and white people will be discriminated against equally. So anyway, that's the story, and the basic prediction from this is that people from blacker neighborhoods, because these neighborhoods are more likely to be demarcated as high risk, should have a harder time getting loans, even once we control for any loan relevant characteristics of the neighborhood. And this has been tested many times, and it's been shown repeatedly this is just not true. So, a 1977 paper found that race had no significant independent effect on loaning in a dataset from Pittsburgh. Another 77 paper found the same thing in Toledo, Ohio. Although it is worth stating this study, like much other research, showed that loans given in black areas were disproportionately backed by the government. A 1979 paper analyzed data from Sacramento and found, quote, once the effects of socioeconomic status variations are accounted for, measures of ethnicity or age of the housing stock contribute little explanation. And a 1981 paper analyzed data from Cleveland, Ohio, found similar results. Blacker areas received fewer loans from private sources, but more from the government and mortgage firms that were giving loans backed by the government, and the total amount of loans given in an area was unrelated to its racial composition. Now, the exception here is areas with rapidly changing racial composition. In these areas, roughly 9% fewer loans were given, but areas with stably black or stably white populations did not significantly differ in loan rates once economically relevant variables were held constant. And finally, this 1996 paper looked at data from Boston and found the racial composition of an area was unrelated to the proportion of loan applications that were rejected. Now, there are two basic ways you might interpret this data. On the one hand, you might say that blacker neighborhoods are able to get the same number of loans as whiter neighborhoods are, only because the government comes in and backs certain loans. And this undoes the effect of the racism of the private lenders who are making loans that are not government-backed. Or you might think that there should be a disparity between blacker and whiter neighborhoods, even after controlling for economic variables, in the number of loans they get, reflecting the racial difference in the propensity to pay back loans, even after you control for economic variables at the individual level. But because of that, there should be a gap at the community level as well, but there's not artificially because the government is stimulating loans in black neighborhoods beyond what they should be. And you might even argue that that's a very dangerous thing to do at the economy-wide level, because if you try to get banks to give out a bunch of loans in neighborhoods that maybe shouldn't be getting those loans, that maybe that could lead to a lot of loans failing at once, which could cause a serious problem. But no matter which of these perspectives you take, you cannot still hold that people from blacker communities actually are having a harder time getting loans. You can differ as to why there's not community-level discrimination, but there's not. And because there's not, this cannot possibly explain racial differences in, say, home ownership or other life outcomes. And of course, the second explanation, where we do not assume that private firms are engaging in racial prejudice at the community level, that is more consistent with the other data that we've reviewed here than is the first explanation. And so for that reason, empirically should be preferred. Finally, I think I should mention the idea that racism is the explanation for racial gaps in home ownership is on its face stupid, because the racial gap that exists today in home ownership is basically the same as it was 100 years ago. If you think that racism, whether personal racism or institutional racism against blacks, if you think that society today is not more pro-black than it was in 1920, then you are crazy. Like, there's no other explanation, you're just crazy. Because it very obviously is. And so if racial bias against black people was the explanatory variable for racial differences in home ownership, you would expect a decline in the gap as the century has gone on. This has not happened. And so for all these reasons, we can reject this. This is just another false narrative used to prop up the larger false narrative that is white privilege as a construct. And anyway, that is the video. If you enjoyed it, consider commenting or liking the video or sharing it somewhere. If you like the channel a lot, consider supporting it via one of the links in the description. And either way, thanks for watching.